The Fed has raised interest rates as expected, raising the Fed funds target range to 25 basis points to 50 basis points, a 25 basis point move. They are raising the interest on reserves to 0.4 of a percentage point and the reverse repo rate to 0.5 percentage point. That stays the same. The dot plot promises much more ahead, as many as 6 rate increases this year, taking the overnight bank lending rate to a 1.9% level by the end of 2022. By the end of 2023, we go to 2.8% before dropping back in 2024 and beyond to a neutral rate of 2.4%, which is lower than the Fed had been projecting in the past. The Fed, in its comments, saying, with appropriate firming in the stance of monetary policy, the committee expects inflation to return to the 2% objective and the labor market to remain strong. In support of these goals, the committee decided to raise the target range for the federal funds rate to 0.25 to 0.5% and anticipates that ongoing increases in the target range will be appropriate. They go on to say, in addition, the committee expects to begin reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities at a coming meeting. Now, that's the only reference to the balance sheet. No details on what their plans are or when they're going to tell us about them. They do mention the invasion of Ukraine by Russia, saying that is causing tremendous human and economic hardship. The implications for the U.S. economy are highly uncertain, but in the near term, the invasion and related events are likely to create additional upward pressure on inflation and weigh on economic activity. Speaking of economic activity, they're expecting the United States economy to grow at a much slower pace than they were back in December when they thought we would see 4% growth this year. Now that's been marked down to 2.8%, 2.2% in 2023, and 2024, 2%. Those are basically the same numbers we saw in December. Unemployment, 3.5% this year, next year, and 3.6% in 2024. So they don't seem to be thinking their rate increases are going to raise unemployment. Inflation, PCE inflation was 2.6% for 2022 in the December forecast. It's now 4.3%, dropping to 2.7% next year and 2.3% in 2024. And as we mentioned, the long run rate for the Fed funds is going to be 2.4%. So 2.4 would be neutral for them. There is one dissent today, guys, and that is St. Louis Fed President Jim Bullard. He thinks the Fed should have gone 50 basis points. It's a 9-1 vote.